Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, remember that yesterday, the dreaded last 60 minutes jinx really returned the Nifty to something that it had ended at and on the last Monday as well. So the index gave up all the session's gains. It fell 200 points from the day's high and then ended in the negative territory. The big question is, will the market stage a bounce back? Because now all eyes will be on the big macro picture and the RBI policy. We will tell you all of it, but first up, we're tracking the top headlines this hour. Indian indices are likely to remain in a narrowed down-facing channel on Tuesday as a lack of strong cues puts the bulls on the back foot on the Lal Street. Cash stocks will garner the spotlight. Markets will also remain in a cautious mode as all the important three-day meeting of the Reserve Bank of India's Monetary Policy Committee begins today. Investors await the outcome on the trajectory of interest rates on February 8th. A very good morning to all our viewers this morning and good morning to you, Shail, as well. Well, just like I was pointing out that the Nifty gave up all the morning gains yesterday, then turned volatile, and of course the last 1 hour of trade did show us that the markets increasingly looked at profit booking across the board as well, barring some of the pockets that were still looking at some buying happening, especially at the PSU level. But do you anticipate more volatility right ahead of the RBI's policy meet now, and how would you look at some of the levels that investors need to watch out for, Shail?
A very good morning to you, Sakshi. And as both of us know, the weather is improving dramatically in Delhi. It's not as cold as it was about 4 or 5 days ago. The skies are clean and blue. And yesterday I was at Lodi Gardens taking a walk to get a clarity in my mind. And here is the clarity. What would you want me to start with, positives or negatives?
Positive for sure.
Okay. Let me just start with the negatives for a change.
Okay.
Okay. So the daily Nifty chart is right there in front of you, ladies and gentlemen. Sakshi's pointed out at the last hour sell-off that we saw on the Nifty yesterday, and we closed at about 21,771. Sakshi, this is what is there in front of you as far as the Nifty is concerned. Now, as you rightly mentioned, we have a 3-day event, that is the monetary policy meet, and on February 8th, which is 10 a.m., the Reserve Bank of India's governor, Shri Shaktikanta Das, will give us the trajectory of interest rates. 8th also happens to be Thursday, which is the weekly expiry for the Nifty. So these are two events that are coalescing together. Now, I'd also like to show the 10-year US bond yield chart, Sakshi, and this is where the pain that is likely to come into the market is going to be reflected. This 10-year bond yield, Sakshi, was dripping lower for weeks together, and that was the reason why you saw a fabulous rally across the board in the US markets, which are at a record high, and of course in the Indian markets, which again hit record high. So from a high of about 5.1 somewhere in 23rd of October, the yield slipped to as low as 3.18, which was at the end of January. Now, because of the kind of data and the strength that is coming in the US economy, we are now seeing that rate cut hopes are now, not in the March meeting as far as the US Federal Reserve is concerned. Similarly, this will also percolate down to emerging markets. If the US Federal Reserve is not cutting rates, Sakshi, there is no way that the Reserve Bank of India, even if it wants to try to cut rates, will do that. So that is one important point that I would want to make, that for the next 2-3 days, especially till the expiry of the Nifty, the index, both the Nifty and the Bank Nifty, will now remain sideways. Now, what is also happening is that at 22,124 and 22,126 actually, which was the record high that we saw getting hit on the next day of the budget, which is the previous Friday. Let me just get the date right for you, which is Friday, 2nd February. That is a zone, Sakshi, where a lot of supply is coming in, and that supply is a bit of a concern, because the market needs momentum to overcome 22,125, 22,150, and that momentum is lacking because you have an event. Now, because the momentum is lacking, it is the option writers on the Nifty chain that are creating a problem, and they are writing options, which means they are expecting the Nifty to slip lower and lower. And that is what the option chain, Sakshi, says, that 21,600, you see a lot of put unwinding happening on 21,600 option call, the weekly option call expiring 8th February. In fact, at 21,600, about 13,82,000 puts have been taken away by bulls, which essentially means that this level is getting weaker, and you might see the index slipping towards that one. So the range is 21,900 to 21,600 with the requisite support and resistance levels. Both the Nifty and 21,600 actually also happens to be the 20-day exponential moving average of the Nifty. So it's a trading range as far as the Nifty is concerned. Ditto Bank Nifty. We will await the outcome of the Monetary Policy Committee meeting. February 8th, 10 a.m. is my view that indices will remain sideways. It is the option writers market for that point of time, but a lot of interest in cash stocks. In fact, today is the day to watch out for oil marketing companies, because Asia's largest event for the energy sector takes place in India. It is chaired by Prime Minister Narendra Modi, and you'll see a lot of hectic activity happening in terms of how to make India a bit more self-reliant as far as energy consumption is concerned, Sakshi.
Understood. Shail, on the Nifty Bank particularly, we've seen that it is the weaker index among the two indices. It yet again failed to close above the 46,000 mark. Now, it is 12 instances in the last 14 trading sessions where the banking index has actually failed to sustain a close above 46,000 mark as well. What does this really tell us about the nature in which the Nifty Bank is progressing going forward?
So, Sakshi, you have the daily chart of the Nifty Bank in front of you. We've seen a very, very sharp bounce back that's come from the 200-day moving average, which is on the 24th and the 25th of January. And from then on, which was a low of about 44,500 to about 46,851. That's a 1,300 point move that the Bank Nifty showed all of last week and some part of it in the previous week as well. So a bit of a profit booking is happening from there, and as you can see, the market is not appreciating anything that the private sector banks does, except for the PSU banking basket, which has very, very little weightage on the Bank Nifty. Nothing is working for this particular index, and again it will be in a pause mode for the next 2 or 3 days in a sideways to downward facing channel. Because the view on interest rates will emerge, the view on growth will emerge, the view on inflation will emerge at 10 a.m. on Feb 8th. So my suggestion is, let's keep Nifty and Bank Nifty aside and focus our energies on the cash markets. Actually, lots of action happening there, lots of action.
We will keep an eye on the cash market, but any particular stocks in the FNO space as well that you're looking at?
Sakshi, we had a blowout on Tata Motors yesterday. The earnings were very strong, and I think today is the day for Ashok Leyland. I'm sure you'll give a lot of data on this one as to how the earnings are moving, how the earnings have come up. But this is one stock that I have in mind today. We've seen a blowout performance from Tata Motors yesterday. The counter was at a record high. Ashok Leyland is no small change. This company was also at 180 rupees, again near its all-time high, and it showed a 10% rise in open interest. The earnings have been fantastic. I'll take a look at this one in the frontline FNO, and also Sakshi, Bharti Airtel. You've been marking the stock for a long time, a record high, 82% rise in third quarter profit, sadly below expectations, but the earnings per the average revenue per user has increased 2.5 times Q on Q, and that is something to be deeply appreciative about. So these two companies, plus a host of OMCs, plus a host of cash PSUs that are on my radar, Sakshi.
Okay, well, these will be the stocks that we will keep an eye out on. Now, let's focus on what the global cues are suggesting to us. Remember, Wall Street's main indices closed lower on Monday's trading session after Federal Reserve Chair Jerome Powell really pushed back firmly against speculation that rate cuts could be imminent, while investors assessed a mixed bag of U.S. earnings reports as well. So you did see the Dow Jones slipping about 0.7% in trade, the Nasdaq about 0.2% low, and 0.3% of a loss for the S&P 500 index. All the three indices fell in trade. Now, following this, most Asian markets also fell early in the trading session today, tracking the declining trends of the Wall Street overnight, even as the investors will await the interest rate decision from the Reserve Bank of Australia later in the day as well. So slight upticks can actually be seen on Hang Seng index, that's actually 2% higher in trade, but Nikkei Kospi is down in trade, and even the Shanghai has picked up pace. Remember, yesterday also there were some ticks in the Shanghai index, and therefore 0.9% of a recovery is coming in over there as well. Now, as far as the trends in the GIFT Nifty are indicating, they actually indicate a negative start for the broader index in India, with a loss of about 31 odd points in the major index here. Now, as far as the flows are concerned, remember there's a change of trend that we've witnessed. The domestic investors turned out to be heavy sellers on during Monday's market correction, while the foreign investors turned out to be net buyers. Here, FIIs bought about 518 crore rupees worth of stocks, while the DIIs, they sold about 1188 crore rupees worth of stocks as in the Indian markets as well. Now, let's focus on some of the stocks that you need to keep an eye out on. Rightly pointed out by Shell on Bharti Airtel. So that's the one that I'm watching out for. Net profit at 2442 odd crore rupees. This has missed the estimates, however. The revenues and EBITDA are in line with larger estimates on the streets. The margins of 52.9% are higher than the expectations of 52.2%. And on a sequential basis, we've actually seen the margins narrowing 20 basis points as well, while its profits have risen about 80% on a sequential basis. Now, the Indian mobile services average revenue per user stood at 208 rupees. That's a sharp jump from 193 rupees in the same quarter last year as well. Ashok Leyland, that's going to be under key watch. Net profit of 580 crores, slightly higher than estimates. EBITDA margins of 12%, higher than estimates again. On a year-on-year basis, net profit grew by 60%, while the revenue, however, was flat. Margins expanded by 320 basis points, and commercial vehicle volumes are at a historic high of 1.38 lakh units for the first 9 months of the year as well. Profitability for the quarter was aided by good volumes, better realizations, high cost savings, and of course, we've actually seen a strong performance all across. BSE, that's the one I'm watching out for. Highest ever quarterly revenue for this company, 431 odd crore rupees, up 76% from last year. Net profit from the period for the period also has more than doubled to 108 crores. And average daily turnover in the cash segment is now at 6,643 crore rupees. That's up from 4,243 crores last year in the same quarter as well. Strong set of numbers coming in. We've actually seen the stock run up 17% over the last 1 week in the run up to the earnings. Now, Tata Chemicals, that's one stock that you need to watch out for. Net profit here is down 60% year on year to 158 crores, while revenue declined by 10.1% to 3730 odd crore rupees. EBITDA has seen a drop of 41% year on year year, while the margins have narrowed to 14.5% as well. The demand environment remains challenging. IEX, that's another stock that I'm keeping an eye out on. Here, the total volumes in January were up 26% year on year, and the market clearing price at 5.83 rupees per unit, down 6% year on year as well. We'll keep an eye out on IEX. The way it has moved up is just 1% over the last 1 week. It has been lacking strength, and we'll continue to watch out for LIC. Of course, this stock has been in limelight, crossed 1,000 rupee mark as well in yesterday's trading action. A very strong momentum over the last few trading sessions. The company is now going to be considering interim dividend at its board meet on February 8, and the company will report its Q3 results then as well. So these are some of the stocks that I'm keeping an eye out on as well. Shail, anything else that you're watching out for?
Sakshi, I think we need to sort of understand that there was a fairly decent correction, although intraday, in the PSU basket yesterday, and the fact that you mentioned that DIIs were net sellers. So one must understand how the institutions are looking at this very, very strong and robust rally, and it is a note of caution again to newer retail investors who are trying to ride this PSU uptick. So while the overall sentiment, the overall momentum for cash counters remains in place, but one needs to be extremely cautious given the fact that selling has suddenly appeared. You have a major event 2 days later. Therefore, one needs to keep, how should I say, fresh positions in these cash stocks, whether they are from the PSU basket, in the banking sector, in the defense sector, in the railway sector, and in the energy space in mind when one enters this segment. It's an extreme note of caution, and if institutions are booking profit, they don't book for 2, 3, 4% fall. They book for a substantial period of time. In any case, charts are overstretched for stocks such as SGVN, NHPC, how should I say, IREDA, railway stocks. So one needs to be very, very agile, nimble, and professional when he or she wants to trade these levels. An extreme note of caution from what we got one from Mr. Ashish Kapoor yesterday in the late afternoon show. Please watch the exit door very carefully. The party is at its peak, but you should not be paying the bill. बहुत ध्यान से ये बात सुनिए, सोचिए और इसको अपने कार्य में समाइए. साक्षी.
Okay, what we'll do, Shail, is we'll take a very, very short break. When we return, we will also be joined by our guests, and we will be opening up with the pre-opening rates. So stay with us, viewers. A lot more action on stocks and ideas and strategies follows up right after this break.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.
A warm welcome back to you, ladies and gentlemen. Market today now looks at how the pre-open rates have come up. We have a 120 point uptick on the Nifty. How I so wish this were true, but this will settle down and probably you will have a flat pre-open. Let's look at stocks that are enjoying this bounce. Tata Motors, no surprise there, 2% higher, 945. What we'll do is we'll very quickly look at the earnings, boys, and then start looking broader. I want to see what Bharti Airtel is doing. At the moment, Bharti Airtel has opened 3% higher at 1148. This is a very good sign. How about looking at Ashok Leyland? This is a stock that should do fairly strongly as far as prices are concerned, and Ashok Leyland for you at the moment is 10% higher, 190. So that's how stocks are moving. I'd also like to, Sakshi, make a point on IndusInd Bank and HDFC Bank. This is of critical importance. Yesterday there was a news item. Actually, it's a permission received by HDFC Group to raise stake in IndusInd Bank up to 9.5%. This is a permission given by the Reserve Bank of India because it controls the shareholding permissions, to what extent individual groups can do. This does not mean this permission is for HDFC AMC and HDFC life insurance companies, not for the HDFC Bank. It does not mean that HDFC Bank is trying to buy a 9.5% stake in IndusInd Bank. Please keep that clarity in mind. Nevertheless, it's a strong show by IndusInd Bank, about 1.5% higher. Let's look at the NSE 500. What's buzzing? Triveni Turbine, 10% higher, 390, must be earnings led. You have insurance company NIACL, 278, 4.6% higher. There is a strong move coming in MMTC, 98.45, 6% higher. No let up in NHPC, 107.4, 3.6% higher. BSE, Sakshi was mentioning earnings were disappointing. Markets are still up 1.9% higher, 2610. That is how FNO is, that is how NSE 500 is moving. Sakshi, there is another 10% downtick on Paytm at 394. This is painful because the company is trying to provide some kind of clarification, but the market is not accepting its view. You're down 10%. What else are you watching? 98 points higher on the Nifty, 21,870.
Stock that we need to keep an eye out on. Morgan Stanley has come out with a report on Bank of India. It's downgraded the stock to underweight from overweight with a target that has been cut to 125 rupees. In Q3, the NII missed estimates by 6% as the margins declined 23 basis points Q on Q. And there was a sharp moderation in the loan spreads as well in the earnings. And of course, apart from this, we've seen that the credit costs were better than expectation. The stock has already rallied pretty sharply. Over 40% in the last 2 months odd, and therefore you can see just a flattish move at 139 odd. We'll continue to keep an eye out on this one as well. Bharti Airtel, let's look at that one too. Earnings and the impact on that. Here we've also seen brokerage houses come out with their views. Morgan Stanley has a target of 1015 on Bharti Airtel, equal weight call, calling it a steady show. 3.2% higher, 1150 currently on for Bharti Airtel. So it's mostly achieved the target price of Bernstein that had a target price of 1140, mentioning the strong ARPU on that front as well. A lot of other stocks, let's look at even Metropolis, for example, There is a sell rating by Goldman Sachs on Metropolis with a 1375 target. They've said that the earnings were another miss on the margins front, and upcoming price hikes are likely to support profitability, but it's raised concerns on the volume growth as well. We'll continue to watch out for this stock. On Astral specifically, Morgan Stanley has given an equal weight call, so let's look at that stock. How has that reacted? 1909 is the target price that Morgan Stanley has given on Astral. Just 1887, about 0.6% of a move is what we can see on this one at this point in time as well. On HDFC Bank, let's look at that. HSBC has a buy call. However, the target price they've slashed to 1750 from 1950 earlier. They've called the loan growth, increasing cost ratios as some kind of a concerns, and the valuations reflect a bear case scenario as per them. Flattish trade with just a positive tick as far as HDFC Bank is concerned. But definitely it's Ashok Leyland, and that's going to be important to watch out for. Slow brokerage houses are giving a buy rating with a target price that's risen up to 230 rupees for Ashok Leyland. You can see a current 4.5% uptick on this one, 187 currently on Ashok Leyland as of now. So this is all the brokerage houses take as far as some of the companies are concerned, Shail.
Sakshi, two stocks I'll also mark. Good earnings and bad earnings. Idea Forge. This is a defense company. It's moved. It got recently listed about 6-8 months ago. It's up 20%, 844. The earnings were very good. It's moved to a profit in the third quarter from a loss in the same quarter a year ago. Of course, the top line is pretty good, and this is something you need to look at. Very strong volumes, about 150,000 shares coming up in the first segment as far as in the first pre-open trades as far as prices are concerned. So this is something to watch out for, although price has already been discounted. Again, one good thing on Paytm, Sakshi, I'd like to mention is that there is liquidity coming into the stock, which essentially means people are able to exit. 88 lakhs shares have been traded so far in pre-open. This is a good sign. This essentially means that the lock, the 5% circuit, the circuit is showing traction. There are people who want to buy. We don't know the quality of those people, whether they are retailers or institutionals. We don't know. Only time will tell. But this is something to look at, that liquidity has come back into the stock, and this is now price discovery that is happening. Remember, the first two circuits, 20 and 20, showed very little volume. एक दिन 8 लाख शेयर ट्रेड हुआ था, एक दिन 12 लाख शेयर ट्रेड हुआ था. At the 10% circuit lower yesterday, there was some decent volume of 50-60 lakh shares. But in the pre-open now, you have 89 lakh shares being traded. Let's hope the circuit is liquid so that at least price discovery can happen. People who are angry, they will leave, and those who want to buy this falling knife, it is up to them. But what is most necessary is that there is volume on Paytm. Again, let's look at what the bank Nifty is doing, Sakshi. This clarification on IndusInd Bank permission given to HDFC Group is very, very critical. People should not mistake this to the fact that HDFC Bank wants to increase its stake in IndusInd Bank. It does not have a stake, and it was the parent of the AMC and the insurance company. Therefore, it applied for permission on their behalf to RBI. Sakshi.
Okay, let's now welcome our guest on the show. Dharmesh Kant now joins in, Head of Equity Research at Cholamandalam Securities. Good morning to you, Dharmesh. Tell us, what is your own sense of how the markets are looking like? Yesterday, we did see a bout of volatility really take place. All eyes on the RBI's policy right now. But your own sense of which way is the market overall headed, and any particular spaces that look promising to you now?
Yeah, good morning, Sakshi. Good morning, Sanjeev. I mean, markets have now entered a zone where Mumbai roads are. You don't know each morning which road will be dug and where there will be a traffic diversion. So same is the case with markets. Earnings so far has been good, particularly in the middle small cap basket. If you look at those earnings, I was doing an aggregate of around 240 companies where the aggregate itself spoke about 34% profitability growth on a year-on-year basis. But the caution is, this is the best earnings you have seen so far. Henceforth, going forward, repetition of same kind of growth will be difficult. One is the base effect is high because last year, last 2 quarters were actually very good. And secondly, we are enjoying the best of the operating margins. So hardly any scope of error left now. And stock prices have moved so fast, so high that it's almost priced to perfection, even better than that. So they are now in a heated territory. So there is this caution will keep on playing out. One or two bad misses here and there, the stocks will be punished very badly. As far as pockets are concerned, from trading perspective, there's hardly any pocket you can trade now. You have to be lucky to make money by doing a trading activity. Investment perspective, you have to be a very long window, a region of around 2 years kind of a thing. If you are having that, then still there is scope in sectors like, I mean, defense is one area where it is not as it is as railway stocks are there. So defenses area, there is manufacturing segment. So there the scope is still there, like Siemens, ABB, even BHEL, you can double into that from investment perspective. And then there are auto ancillary, having a focus on EV plays. So these three areas looks promising. Financials, one has to wait as of now. I mean, we have seen the NIM compression coming way, and this is likely to aggravate as we move into FY25 first half. So there, I think almost a top has been made.
Namaste Dharmesh ji, very warm good morning to you. How do you look at earnings from Ashok Leyland? This has been in the shadow of Tata Motors for a very, very long time, but fantastic numbers. Your views on Ashok Leyland, sir?
Yeah, Mr. Selji. See, Ashok Leyland numbers were good as far as operating parameters are concerned. So margins went up, and because of the lower commodity prices, this was bound to happen. And now Ashok Leyland is more of a story play on the electric buses side of our business. So that is where the entire, emphasis and focus is, and management is also focusing on the same area. MSCV per se is going through a down cycle. I don't think normal IC MSCV segment will do anything good. I mean, the market itself will see a compression. But it is the switch to electric buses, and the orders are flowing in from different states and the government of India. So that will keep the momentum up. At 190 kind of a price, again, it looks very stretched to my mind because valuation parameters, as has been the case with over 90% of the companies you trade these days, it looks stretched, but it's a story by like Tata Motors. So 10-15% more from 190 levels just from a trading and a positive sentiment perspective is likely on the cards. I don't see it going beyond 210, 220 range for next 1 year or so.
Okay. Let's welcome Ruchit Jain also now. He's with us, lead research analyst at 5 Paisa. Ruchit, good morning to you. Tell us your two stock ideas that you'll be going with today.
Hi, very good morning to everyone. Well, two stocks idea. First would be a buy call in Bharat Forge. So primarily we have seen that this stock has been forming that high top, high bottom structure, and post the recent corrective phase, the volumes action have again started picking up. So I think the stock could form another higher high in the near term. So short-term traders can look for buying opportunities in Bharat Forge with stop loss below 1227, expecting target somewhere around 1340 to 1350 zone. And no, granules would be another call where no, we are quite positive on. In fact, the entire pharmaceutical space has been showing a decent outperformance since last few days. And granules is one stock where even the short-term moving averages such as 20-day exponential moving averages has been acting as a good support for the stock. So I think the outperformance could continue in spite of some volatility, if any, seen in the markets. So granules can be bought at current levels with stop below 412, expecting short to medium term target somewhere around 450.
Okay. Good morning to you, Ruchit. So glad to see you here. Sakshi, we are now trying to open with an uptick as far as the Nifty is concerned. There's a decent block on that's happened on Paytm. That's what I want to mark. I think somewhere like 69 lakh shares have been traded at 395, and that's a value of about 263 crores. So this is needed to be watched. Let's hope the circuit opens even if it trades 10% lower. We have prices. I'll start with the Paytm. It's now down just 7%, 405. So there is some activity on the green side. Let's look at the market watch, ladies and gentlemen. A flat opening on the Nifty, 14 points higher, 21,790. Bank Nifty in the red, 133 down. The IT and the Nifty 500 have opened in the green. Okay, let's look at what's happening as far as the earnings boys are concerned, and I want to see what's on Ashok Leyland. 3.5% higher, 185. What's Bharti Airtel doing? 2.6% higher, 1143. I want to see what Tata Chemicals is doing. Top loser, 3.6% lower, 945. Okay, now let's pay attention to the index heavyweights. So the market is appreciating earnings positively as well as negatively. It's punishing people. Okay, what is Reliance doing? Flat at about 2883. How about HDFC Bank? 1444, flat again. Infosys, 6 rupees lower, 1680. There is a sea of red on the index heavyweights. That's not a good sign to begin with. Both ICICI and Axis Bank are opening 0.5% higher, 1055 and 1020 respectively. What about IndusInd Bank? That's something that I want to check simply because that's the news that's coming in. Flat again, nothing much there. Okay, let's shift focus to FNO. I want to see the top gainers as of now. Zydus Life, Sakshi, we missed this one. There is a buyback to be announced on February 9th. So this is important. 802, 5% higher. This is the top gaining stock on the FNO space. Bharti Airtel, Ashok Leyland are at the second and the third point, gaining 2.5% respectively. Then you have a host of PSU stocks. IEX, Petronet up 1.5%, 2% respectively. Steel Authority 1.3% higher. This is looking good. How about losers? Tata Chem certainly. A bit of a profit booking happening in Gas Authority, 2.5% lower. Some banks are weak. Bank of Baroda in particular, 1.3% lower. Let's look at NSE 500. Then we'll go to Ruchit immediately. Sakshi Paytm, interesting. It opened 10% lower. It's now just 5% lower. That block deal was the key. Now at 415. Let's see whether it is able to at least get away from the 10% lower circuit. Okay. Again, the theme remains PSUs. In the insurance space, NIACL 3.5% higher, 275. SGV and GSFC are all up. One record high I want to check. Zydus Life, Brigade and KSB Pumps, LIC of India as well, 1026, 2.8%. We'll get Ruchit into the conversation. Nifty is now flattened out, 5 points lower. Ruchit, anything that catches your fancy in initial trades, and then Sakshi, over to you.
I think the opening on the indices are quite flat, but we have seen that stock-specific activity could continue. What I'm witnessing that the banking space are showing some pressure. So Bank Nifty index also, if you see the relative underperformance has been there in this index since last few weeks, where the markets have again tested all-time high in last Friday session. But Bank Nifty index is still quite far away from its previous high. Banking and NBFCs could remain under pressure in today's session as well. And Bandhan Bank is one stock where the stock is on the verge of a breakdown. And in case if it breaks that support of 219 in today's trading session, then I think intraday traders or short-term traders can look for some short-term opportunities in Bandhan Bank.
Okay, let's watch out at Paytm once again, and I want Ruchit your view and Dharmesh your view as well, both on the stock, since we are seeing some buying happening from the lower levels. A big block deal happening today after Morgan Stanley really picked up that stake on the second day of action as well. 5% now down and at 415. Ruchit, what do you say on Paytm?
So it's actually 4 continuous lower circuits, back to back, and technical trends does not change, in 1 days of pullback move. So I think, as of now, the broader trend technically still remains negative, and only a series of higher top, higher bottom structure if going ahead, if we see any kind of buying interest continuing, then I think bottom fishing or buying interest could be done, shown in Paytm. But for now, technically, these are not the structures where I would recommend going long in Paytm.
Okay, and Dharmesh, your sense, is it a good lucrative level to look at for all those investors who've been eyeing this stock to buy at attractive levels?
So what for? My question is why you want to buy this now? It's bewildering why promoters do such kind of an activity. The allegations are very, very serious, and this guy is a technocrat. I mean, he is a technology man, and then such kind of a lapses if it comes to So may not be money is not being lost by any of the participants or the clients, but that's not the question. The entire compliance issue is very serious allegation, and seriously, no one should be buying the stock. I mean, if they, as Sally said, if an exit is anybody gets it, they are lucky for that.
Okay. Shail, that you had mentioned Idea Forge, that's a very, very interesting stock to watch. 14% higher right now. A very strong move can be seen on this one. Ruchit, could you look at the charts of Idea Forge, even though you will not have a very long historical chart? And then Dharmesh, your view as well. 806, 14.5% right now.
Post listing, we have seen a decent corrective phase, although the data is limited. But no, since the month of July itself, we have not seen any kind of no volume based up move. So it would be crucial that today we have already seen a gap up opening, but the follow up move would be quite crucial because there would be many investors who are stuck in the stock post IPO or during from IPO levels. So I think they may be looking to exit some positions on such pullback moves. So due to which the selling pressure or the supply could be higher at on such pullback moves. So I would say that not a kind of chart structures where it's looking that the stock should show a significant run up in the short term. But obviously, some pullback moves due to oversold setup if comes, then 860, 850 would be the range where the resistance would come in again.
Okay. Dharmesh, 16 times Q on Q, the profit has jumped to 14.8 crores. And, however, the loss is still about 7.8 crores. Would you be positive on Idea Forge?
I would like to see a couple of more quarters before changing any view. We did study this before the IPO, but we did not come out with a note on that. That was purposely. We wanted to see at least 1 year of performance before coming out with a long-term, view on this company. So we'll hold our comment as of now.
So there is a very, very cautious view coming in from both analysts as far as Paytm is concerned, and that is only to be expected. It is rare for people to stick their neck out, but the price is telling us something. Now the stock is down just 2.8%. Remember, we are just marking the price because this is the most active counter as of now. Sakshi, 869 crores worth of shares have been traded in the first 7 minutes of the trade. 427 for you. Remember, it was at a 10% lower circuit in pre-open. There was a block deal of 69 lakh shares that happened. Beyond those 69 lakh shares, now 2 crore 26 lakh shares have been traded. Sakshi, this is what I'm trying to say. The company might be in pain, it might be under a regulatory watch, all sorts of problems must be having. But it is the liquidity in the counter that decides whether people want to buy this falling knife or it want to exit. So this is the main point that we are trying to make, and to my mind this will be the most important stock for today. It has set a base because it hit the lowest ever since its listing, somewhere like 400, I think what was the low for today? Let's just mark that in our memories. The low was 395 rupees. So that's the low that we are looking at. Yeah, so that's what we are looking at, and let's see how it proceeds from this point onwards. The Nifty is back in the green, 21 points higher, 21,790. And let's look at the pullers and draggers on the index. Let's take a broader view on what's happening. Okay, TCS fresh record high, Sakshi, above 4 digits, above 4,000. So there's a change in the digit. It's contributing 19 points. Bharti Airtel, strong set of numbers, 2.5% higher, 16 points to the index. L&T, thank God it's back in green territory, now 0.5% higher, 9 points. HCL Tech and Maruti are also contributing 7 and 8 points respectively. Okay, profit booking in RIL, that's okay, record high par hai. It's contributing a negative 11 points. HDFC, ICICI Bank are contributing 4 and 6 points respectively, and Power Grid down 7 points. Nifty is flat. Let's look at the broader markets in terms of how the indices are shaping up. We track 19 for you. Out of those 19, 10 are in the green, 9 in the red. The IT index is the top gainer, 1.1% higher, 37,591. Auto index is up 0.7%, 19,753. The pharma index is 0.5% higher, 18,402. It's the energy space that is coming under profit booking. It's the top losing index, 1% lower, 38,169. Sakshi, what are you watching?
Shell Geo Financial Services, a 5% downtick. Remember, this is coming after Paytm has clarified that the news about Mukesh Ambani's Geo Financial Services looking to buy the wallet business of Paytm. This news was circulating yesterday. Even we mentioned on our channel, but we categorically had said that there is no clarity from any of the companies which are being talked about. And there you can see it, a 4% downtick on Geo Financial Services, 277 right now, after Paytm has come out with a statement that they are not in talks right now, or neither is Paytm's Payments Bank with respect to the sale of its wallet business. So we'll keep an eye out on Geo Financial Services and the developments around that as well. A lot of other stocks are moving up still. You know, MMTC, Shell, I remember you pointing this out when the PSU stocks were moving up. It's still up about 6.5%. So there is a strong move on that one, 98 rupees odd or so. SJVN is in move again. We are seeing GSFC, that's the stock that's moving up. KPI Energy, that stock is sharply up in trade, about 6.5%. That's the one that's moving up. Then there is Triveni Turbine that I did see. That's also moving sharply up in trade today. KPI Green Energy about 3.5%. And when we look at Triveni Turbine, that's also up about 10% now. Dharmesh, would you want to comment on Triveni Turbine? Do you track this stock at all?
No, actually, I mean, these are mid-cap and small-cap stocks, so we have not been tracking it off late. But the entire space, as I said, is buzzing. So all this, space where it has to do with power equipment and generators, boilers, so these sectors will keep on doing well. So you have to be stock specific. But specifically at the turbine or KPI Energy, we don't track.
Okay. Sakshi, there's a stock that I want to mark, and no surprise there. It's Paytm. It's in the green, and now 440. Blowout volumes happening. Now about 2.63 crore shares have been traded. The value for this one is somehow in the vicinity of 1,040 crores. And the counters moved 10% from the low.
Days low.
And that's what is looking at as far as the most important stock for today is concerned. Now, I'd just like to mark how profit booking is happening in PSU shares, and rightly so. We'll start with NBCC, 4.5% lower at about 159.20. We have a 1% downtick on NHPC. We have SGVN flat at about 149, and we have a negative tick on Steel Authority, 0.2% lower, 135. What's moving in the positive? Sakshi, remember Indian Overseas Bank, it had gone up about 18% yesterday. It is still in the green, 64.85, 3.5% higher. LIC of India, 1% higher, 1,008. Let's get Dharmeshji's view on LIC. A record high, Dharmeshji, on the most valuable PSU stock on the Indian markets. Any view that you would want to share on LIC at current levels?
It's a buy and hold kind of investment bet. It's not a trading at all, and still it's the largest player in the life insurance segment in India. And the only thing they need to do is ramp up the technology part and be more competitive at par with their private sector players. So there's still a challenge out there as far as the operations and execution of their policies are concerned. So that mindset needs to be changed. If they do that, I think it's a doubler from where they are sitting on, because the type of reach they have in the penetration pan India, plus the trust they enjoy with the people, it would be very hard for private sector players to compete on those grounds. So only thing is procedural aspect is still, and technological upgrade is still not there in LIC, though they have been doing, but a bit slow. So incremental market share they have not been able to get. Having said that, I would only like to highlight is all insurance companies are a very good play if you are having a time horizon of 5 to 10 years, because still there's miles to go to capture and increase their wallets, because market itself is going to expand in a much bigger way. So what we have recommended our clients is be an investor in all these companies, be it SBI Life, HDFC Life, or LIC of India, but don't trade it.
Okay, long-term horizon is needed. Ruchit, your view on LIC, the way it has moved is, commendable over the last 2 or 3 odd trading sessions. And with that, we are looking at the entire pack moving. Even I can look at New India Assurance today, moving up very, very strongly in trade. How would you look at these two stocks?
So in fact, in LIC, we got a technical breakout in the month of November, when the stock surpassed at 650 levels with very high volume. And post that, if you see, then smaller corrections which have been seen in last this 2.5 months of journey, the stock has not breached its 20 EMA support yet. So this still indicates that the still stock to medium term trend continues to remain on the positive side. And more importantly, the kind of volumes that the stock is witnessing, even at current levels. Yesterday, the move that we saw from 950 to 1020 witnessed one of the highest volume in the recent past. So I think this clearly indicates that in spite of the price up move already done, still good amount of buying interest is there in the counter at current levels. So I think this momentum could continue going ahead as well. Any kind of minor dips if we get, then buy and dip strategy should be kept for LIC. The 20 DMA which I was talking about, which is acting as support on any corrections, is now placed around 920. So I think that's a very crucial support for the stock to watch out for.
Okay. We'll keep Paytm on our radar, 1.4% higher now, Sakshi. It's trading at about 439 now, actually 444. Let me just get the correct price in for you. Yes, 444, now 1.4% higher. Remember, we are just marking the price. There is no invitation to buy or sell. Please take your own independent financial view. This is the most important stock that's sticking in terms of price, volume, institutional and retail activity on Dalal Street, and therefore is on your screen. 2.9 crore shares have been traded, 1175 crores in worth of volumes, and the fact that it had 20% lower circuit, 20% lower circuit, 10% lower circuit, and then in the morning today again it opened 10% lower at 395, but a single block deal from there for 69 lakh shares has now at least provided liquidity for people to take a view to exit or buy more. Sakshi.
Absolutely. Let's look at a few stocks that are buzzing in trade right now. The pharma space looks to be in the positive zone, especially stocks like Alembic Pharma, Janta Pharma, Alchem Laboratories. These are the kind of stocks that are moving up. Aarti Drugs is moving higher in trade. Some of these, mid-cap and small-cap stocks that are buzzing. Apart from, of course, we're looking at Dr. Reddy's, that's up again 1.5% up. Divi's Laboratories, they are all up in the Nifty zone. But specifically, the broader markets, Rujit, Zydus Life already has a news trigger, which Shell pointed out, 4.5% higher in the FNO space. But Alembic Pharma, Janta Pharma, these kind of small pharma stocks, what do you see?
So I think these stocks could continue to outperform the broader markets. I think the entire pharma space, we have not seen any kind of selling action happening over last few days. And if you look at some of the price actions, such as Dr. Reddy, it has given a breakout from a long consolidation phase. The earlier resistances, which was there around 5,900, 6,000. The last week itself, we witnessed a breakout from that level. Even in the mid-sized names, stocks such as Glen Pharma is there, which is witnessing a breakout from its previous swing high resistance. Ipca Laboratories is coming out of a consolidation, indicating a continuation of the uptrend. So I think pharmaceutical as a space looks quite positive, and I think irrespective of market moves, this space could show some good outperformance.
Okay, Dharmesh, your sense in the entire healthcare pack, where exactly are you positive right now?
I think Granules does look attractive, given it's primarily a API play and generic pharma segment. Apart from that, from a larger cap space, I think Dr. Reddy's came out with a very good set of numbers. And the valuation gap is still there if you compare this with our Window Pharma or a Sun Pharma or a Cipla. So I think with return ratios in excess of 21, 22% and the margins now getting stabilized for Dr. Reddy's, and the foray into the US is again gaining strength. The only area of concern was the European region, that is Russia and Ukraine, and that's also stabilized. So with their specialty chemical play and the generic play, plus with APIs, where they are the masters out there. I think business is again back to usual, and some growth traction is expected around 8 to 9%, with margins stabilizing. 66, 6,700 is the price target for DRL. So in the pharma space, our topic as of now is Dr. Reddy's.
Okay.
Sakshi, we'll need to take a look at this blowout that's happening on the Nifty IT index. Again, 766. It's a 2% higher. I think this is okay. We are now at the highest possible candle, which was last seen in January of 2022. So a 2-year high is what we are approaching on the index level, and strong move coming in across the board. TCS, remember just yesterday we were deciding to talk on the change in digit at 4,000. Well, it's just rallied much beyond that, 3.3% higher. Can't remember a day when TCS rose 3.3% higher, and this is at a time when everybody was cursing the numbers. So we track 16 stocks for you, ladies and gentlemen, in the F&O space, and as far as tech stocks are concerned, 15 of them are in the green. Actually, all 15 are tech only. MCX is not a tech stock. TCS, 2.5% rise in open interest, blowout happening there, record high, 3.3% higher. Birlasoft, we've talked very often, let's avoid that, 858. It's the large cap, Sakshi, which are striking, it's the empire striking back. So TCS 3.3% higher, HCL Tech, very strong numbers, 2.5% higher. Infosys is 1.1% higher, and I still believe Wipro is a large cap IT, 2.6% higher. Ruchit, to you, which one of them looks the strongest to you on the charts? What is your top pick when it comes to IT stocks?
So the leadership has clearly been seen from TCS today. Price up move supported by rise in open interest, the 4,000 level, which where decent amount of call writers were there, that has been surpassed. So we could witness a combination of fresh long built up where breakout trading could be there, and plus this call writers have to unwind their position. So short covering plus long built up could lead to further gains in TCS. So within the large cap space, this looks the strongest. I think 4170, 4180 could be the range where today itself or in a day we could see this moment coming on. And even Wipro is quite interestingly poised around its 20 DMA support since last few days. So Wipro could be another stock where we can expect a gradual up move towards 520. So TCS and Wipro, I think within the F&O names, these two would be the top pick, which could take some leadership or show some outperformance within this sector.
Okay, right. Dharmesh, would you want to take a call on the IT names and your own sense of where exactly is the momentum going to be heading?
Let's see, momentum definitely looks on the upside, because if you look at the US counterparts, though the business offerings are totally different, be it Meta, Amazon and all, they posted a very strong set of numbers. Compared to that, when you look at Indian IT companies, the large cap ones, they were at least they sounded positive from the business point of view. They said that the worst is being done, and now we can things are looking better for it. TCS, in case in point, was the better from the large cap basket, where there was an increase in EBIT margin, though the deal wins were a bit lower on than $9 billion. The run rate they guided for was $9 to $10 billion. So it's sideways out there, but the guidance was positive that things are likely to improve from there. And mid and small cap basket, the good part has been all the companies reported a very strong set of numbers. I mean, Birlasoft, just Shelly was talking about. The numbers were excellent. Gensel numbers were excellent. KPIT numbers were very good. So those companies continue to enjoy a better set of numbers, and valuations are definitely on the higher side. But just from a trading perspective, I think large cap IT stocks are still a place to be in, where TCS has done up quite a bit, but one can now look at, say, Infosys or a Wipro as a carry forward of the baton, and 5-7% can still be made out there from a trading point of view.
Okay, time for a short break. The Nifty is at 21,850 odd, 75 points higher, and it's the IT stocks that are contributing to this recovery in the markets. TCS, Infosys, HCL Tech, all three of them contributing the maximum amount of points to the Nifty's gain as well. What we'll do is we'll take a 30 seconds break. We'll be back, and more stock ideas and strategies to be discussed with Dharmesh and Ruchit on the other side. So don't go anywhere, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi, with me Shail Bhatnagar, and we're in conversation with two of our special guests, Dharmesh Kant and Ruchi Jain, also with us right now. Paytm is now inching higher in trade. It is in the green. 445, currently 1.5% higher in trade. It's recovered extremely sharply from the day's low, which was a 10% lower circuit. Now 2% higher in trade, 447 for Paytm happening. Shail, I remember we were discussing constantly and you were saying that, the price discovery is yet to happen. What is the sense that we are getting right now on Paytm? And of course, what should investors continue to remember now?
Sakshi, let's keep the investors and traders out. Your and my job is to mark the price and bring it into the attention of the viewers. Ruchit ji and Dharmesh ji's job is to tell us what to do. I am very, very clear on this. Now, we had purposely marked Paytm repeatedly in the pre-open session because I knew that today would be the day that liquidity sort of will creep in. For future reference, Sakshi, on the 4th day of the circuit, lowered circuit, always remember it opens for people to exit or to buy. This is for future reference for everybody who's listening to us, and that is exactly what happened. It opened 10% lower, down at 395, a record low, an all-time low. It's wiped out somewhere like 65% of its market capitalization from the IPO point of view. We still don't know, how the stock will close. But for the moment, there is hectic activity in Paytm. Let me just show the volume to you. The counters are about 2.5%. Now 1400 crores worth of transactions have happened on Paytm, making it the top traded counter. Surprise, surprise, Yes Bank is up 10%. Can't remember a time when Yes Bank was up 10%, 25 rupees 15 paisa. 25 crore share trade हुए 25 actually 25.89 lakh shares at 631 crores in terms of volume. There is the railway stocks, Sakshi, are coming back, led by IRFC. I'll give you a very good data on IRFC. 1 second, please. Yes, here is it. The low for today is 152 and it's at 162.95. So there is an intraday correction happening, ladies and gentlemen, and that is being purchased in frontline PSU stocks. Sakshi.
Absolutely. Let's further look at some of the stocks. IT clearly is being the top spot which is being invested and traded in. 2.3% higher now for the Nifty IT index, and it's roaring higher. Ruchit, this mid-cap IT names, KPIT and Birla Soft, we were mentioning, they're all at record high levels again. We've discussed the large cap IT names, but the mid-caps, they're coming back in flavor yet again. There is no let-up in the kind of rally that we've seen in the mid-cap IT space. Your top stock from the mid-cap IT specifically?
So yes, I think overall when the IT sector is doing good, the large caps have no good momentum. So a follow-up move could be seen in the mid-cap stocks as well. And KPIT Tech remains the top pick, within the sector where we have seen that the previous swing highs are broken. Even the volumes on the daily charts are quite positive compared to what we see on a daily basis. So I think KPIT Tech could be one of the stock which could continue its outperformance, which we have seen of late. And Intellect Design Arena, with this would be one of the other mid-cap name, I think, where chart structures look quite positive. A high top, high bottom structure, small corrections recently where we have not seen any kind of high volume sell-off, and the price up moves again have been supported by good volume. So these are a couple of names I think on charts looks quite promising.
Okay, one more stock. Let's touch base at TCS again. It's now 3.8% higher in trade. 4125 being seen on that one. And with this, what's interesting is that let's now look at the Tata Group's market cap as well, which is now soared above the 30 lakh crore rupees market cap figure as well, with TCS inching to almost 4% at the day's high now, because TCS composes 50% of the group's market cap. Then there is Titan that composes about 11% of the group market cap, Tata Motors about 10% of the group market cap, and all these three stocks are in the positive zone. They're roaring higher in trade as well. And now along with it, we are also looking at the metal counter Tata Steel now picking up pace as well. How would you really look at, Dharmesh, the entire fervor in the Tata Group right now? Which are the top stocks that you would identify from the Tata Group that one should still look at continuing to invest in or accumulate?
Yes, actually, I mean, the last 1 year has been a bonanza year for the Tata Group, and they have seen multiple re-ratings as far as valuation-based price targets are concerned, and they are enjoying the benefit of that. So, my top pick from the Tata Group stock presently would be Tata Motors. At 14% kind of an operating margin is one of the best in the industry. And see, with the luxury car segment, it has to be, the margins has to be higher, and that is where Tata Motors was actually lagging 4 or 5 years back. And JLR now represents almost 88% of the operating profit and 83% of their top line. With their foray into the EV space and new launches being, on the pipeline, so I think this run rate is likely to continue. And with slight pickup in MSCV cycle in India, the numbers will be far better going forward. So around 1100, 1150 is the price target for Tata Motors, and TCS already moved up, but still one can remain invested. So these are the two top counters in the Pharma Tata Group space one should be looking into. And then offbit from the IT space, Tata Elxsi, the numbers were not that great, but with the kind of price correction which we have seen, it now represents a very good opportunity from, if you are an investor from 1 year perspective, to start dipping into and adding into your portfolio Tata Elxsi as well.
Let's focus on Paytm. This is the most important stock in terms of price movement today, ladies and gentlemen. The stock at the moment is the most active trading counter on the National Stock Exchange, up 4%, 457.50. 1500 crores worth of transactions have happened in the first half an hour of trade. And remember, this stock opened lower for the fourth successive filter in a row at 395. It was a 10% downtick. A nice block deal of about 69 lakh shares happened at that point of time, and from then on it's moved 14% in the swing up, which is 10% negative. It has recovered 4.5%. It's up now 458.85. We don't know how the day will pan out, but let's just take a fundamental view and a technical view on Paytm for today. Ruchit, coming to you, would you sort of make an estimate of what Paytm's charts are trying to tell you? Is this a buy zone or should one avoid?
So I think, no, technically, as I said, no, we need some price action where high top, high bottom structure, at least on the lower time frame charts, is formed, and the kind of no, four lower circuits the stock has formed. So today, definitely some good volumes have been seen. So some pullback move is there. So, but as of now, we would see this as just a pullback move, which could extend towards 485 to 500, but that again would come in as a resistance. So the risk reward issue, frankly, if you ask me to enter at current levels, no, the stop losses are too far from current levels. Even if I see today's low as a stop loss, because it's trading its historical low. So difficult to take any fresh trades. Looking at technical analysis, but certainly I won't advise any fresh buying over here. But if any existing long positions are there, then 485 to 500 would be the zone where initial resistance would be there to watch out.
Okay. Dharmesh, your view on Paytm, how would you really look at this very strong recovery now for 0.8% higher, now 5.5% higher? It's not stopping anywhere, 461 right now. Do you think it will be able to, reclaim those earlier highs that it was enjoying before this news really came out now with this recovery, or is it still far distant?
Sakshi, I really don't know because this kind of an activity is hard to predict. What are the vested interests being playing out and the pullback and everything. So as far as business is concerned, the only turning point for Paytm business was, which is now under question. And that was the reason why the entire upcycle started in Paytm. Other than that, the ESOP cost was continuing and I mean, contribution profit is something which the concept I never understood. I don't know what is contribution profit. I know plain operating profit and profitability, that is a PAT level, which was not there in the case of Paytm. And with this business now going out of the window, it would be back to square one where they started from. And business, as far as the business cost is concerned, I don't see it returning to profitability as far as your 5 year, 10 year. It's very hard for Paytm to come to that terms, considering the fact that the other mediums like UPI and all is gaining fast traction. So for me, both on compliance count and earlier business count, we were not a bias in Paytm.
Okay, again, we'd like to exercise all due caution at the end of market today. We are merely marking the price action on Paytm because it's the most active counter, the one that is in the maximum amount of news and one that has troubled retail investors, those who hold the counter over the last 4 or 5 trading sessions. It, ladies and gentlemen, remember, has a massive regulatory problem with its sector regulator, which is the Reserve Bank of India. What you see is price action driven by institutions and very, very strong professional traders. You are requested to exercise very, very high degree of caution, whatever you may want to do on the long or the short on Paytm. Sakshi, the counter is now up at 460 rupees, 461.55, 5.5% higher, 1600 crores worth of transactions happening on the Paytm on the National Stock Exchange, making it the top traded counter so far at 9:53 a.m. Sakshi.
Okay, so that was all about Paytm, and we will continue to track all the developments through the day as far as the stock is concerned, and if there is news flow through the trading day for you. Let's again look at the markets and see where exactly is momentum getting built on. All right, in the F&O space specifically, I'm now looking at some move coming in on Max Financial Services, 4% higher in trade. Then there are other stocks like Oracle Financial Services, 3.5% higher in trade. Both of them are moving up. Rujit, would you have a call on either of these? I remember Oracle Financial Services has been talked about nauseam on our channel after Devin Choksi really talked about this stock for the long-term view. But, right now, are you looking at this momentum positively?
Yes, definitely. Post the results, we witnessed a price up move which was supported by very high volumes. Then the stock consolidated for a couple of weeks, which just seemed to be a time-wise correction within an uptrend. And since the entire IT pack is on the roll, I think the stock could continue its outperformance again going ahead. So one can expect some target somewhere around 7,200 in the short term in Oracle Finance, and this is seems to be a good buy even at current levels. And within the insurance space, I think ICC Lombard would be one stock which one short-term traders can focus on. So ideally, another stock where the relative outperformance was seen, and the stock has given breakout from a trend line today. So which just indicates a continuation of the uptrend. So I think ICC Lombard within the insurance space is another stock which traders can look for as a buying opportunities at current levels, keeping a stop loss below 1520 and expect target somewhere around 1600 to 1620.
Okay. Well, let's again look at some of the stocks that are buzzing. Auto space is also looking at some gains. Of course, we did talk about Ashok Leyland. That remains to be one of the top buyers. Maruti Suzuki is now 2% higher in trade, 10,654 currently for this one. Apart from this, we are also looking at TVS Motors, Tata Motors, M&M, all in the positive zone. How would you really look at the auto basket right now, Dharmesh? And any particular stocks that you're now getting bullish on?
Yeah, I mean, Maruti numbers were excellent. So was the case with Bajaj Auto and Hero MotoCorp from the two-wheeler space. So auto numbers, if you look at passenger vehicle sales and the two-wheeler, they were doing very good. The only three-wheelers, MSCV was a bit of a dampener along with the farm equipment segment. My own sense is going forward, Maruti, Bajaj Auto, and TVS Motor is a buy on decline. So any declines, if it comes to be it a market correction or just a sector rotation kind of a play, if it is happening, one should be buying into that. Because the space is looking very aggressive. The two good factors which has been riding the profitability is one is the sales is happening on a consistent basis, and now we are entering into a marriage season, which it will again further bolster the sales number. At the same time, commodity prices have been benign; they have not moved up, so they are enjoying the operating profit, the margin leverage. They have taken price hikes, so the blended realization has gone up. They have upgraded the model. So all these factors are very conducive for these companies. Though the valuation does look stretched, but that's the case with most of the top performing companies on the profitability count. So the top pick out there would be Maruti, Bajaj Auto, and TVS Motor. One should be buying them, but I mean, suggest to buy on corrections rather than riding the upswing.
Okay. All right. Let's again look at some of the buzzing spaces then. On the Nifty, it's clearly the big bank IT bank that you are now looking at. The Nifty IT now at probably record high levels. You're looking at TCS that's driving the show, and its market cap has also now risen above 15 lakh crore rupees mark as well. A very strong momentum can be seen across the board on the IT segment. TCS, HCL Tech, Infosys, Tech Mahindra among the top movers on the Nifty right now, and of course the entire basket follows 2.3% higher in trade right now. That's the clear focus in trade today, apart from some other buying that's really happening in the auto and the pharma space as well. You know what, we'll also be looking at BLS E-Services IPO's listing now, just about 2 minutes away from now. Of course, this was a that had its IPO run from January 30th to 1st of February. The price band was 129 to 135 rupees. Again, the issue price was at the higher end, 135 rupees. With the IPO, which was a complete fresh issue of shares, the company raised about 310 odd crore rupees, and all eyes will be on how the listing will now happen just 2 minutes away from now. Remember, of course, this was hugely invested in by the retail and the non-retail category as well. About 168 times of a subscription, it was what we had already seen on this one too. So, and the grey market has also been indicating a very strong blowout in terms of the listing gains that one could be looking at. But Dharmesh, your sense on BLS E-Services, have you taken out a note on this company? What happens after the listing as well? Would you be still positive?
If the type of listing gains which are being suggested, book profit on that. That's the recommendation of various e-services. It's very expensive.
Let's wait for the first tick to come in, but it's opening 125% higher at 305, and it's a dramatically asset light model. Perhaps that is what is being appreciated by the markets, and all the luck and the best wishes to those who have got this one allotted. The largest customer, which is a PSU bank, Basically, BLS e-services provides digital services such as opening accounts when you apply with your Aadhaar card online in the semi-urban and rural areas where you have lower internet penetration. So it's a go-between a potential banking customer and a PSU bank which wants to sort of open up accounts in the rural and semi-rural space. And it is a subsidiary of BLS International, which provides visa and passport services. 311. Okay. So that's 131% higher, ladies and gentlemen. And the net change is 172 rupees. Remember, the IPO was at 139. So it's an appreciation that is coming as far as this listing has been there. Let's see how it moves. And Sakshi, surprise, surprise, it's the PSU banks which are leading the rally today. So BLS services e-services is also benefiting from that wonderful uptick that's come in 307, 306 at the moment in initial views. While you look at the price, Sakshi, let me just get some financial details on BLS e-services, which is looking at this fantastic listing. Yes, Sakshi. Okay. The first half financial year of FY24, the revenue was 156 crores and the profit after tax was 14 crore rupees. For the full year of FY23 March, the top line was 243 and the profit was 19 crore rupees. So it's a very, very sharp increase in numbers sequentially from FY21, FY22 to FY23. And given the moves that are coming in half one FY24, you're looking at a top line of maybe 300 crores and a profit after tax of about 28 crores, Sakshi.
Okay, so that's a blowout that's happening, a very, very strong listing, and still it's holding on to 125% of gains even right now, but 308 can be seen on BLS e-services even now at this point in time. All right, with that, it's time to wrap up our special edition right now. Many thanks, Dharmesh. Many thanks, Ruchit, for being with us on this very special edition. We will continue to track the markets for you through the trading session. A lot of interesting earnings conversations will also happen, and then we will join you at the closing hour as well with Market Today. Shail and I will be joining you very, very soon. So don't go anywhere. Business Today Television, the spot where you will be able to see everything that is buzzing on the D Street.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Who will save Paytm from the unprecedented crisis that the company is